So we came in today long biased. We have our range here, which we barely tapped down into. We saw in the morning we had this imbalance here. Large 15-minute imbalance. So we were looking at, if we continued higher and failed, this would be the area we were looking at. We actually had a good trade that came out of it in the morning. That was very short-lived. This one here, bang. So real quick with that, we've got three major pieces of information here. Number one is, if we're going to make internal structure, say we're here right now after this candle closure, we want to see failure as we trade into the prior move up in a downtrend, just to be clear, right? Should we find selling pressure? Typically, even after failure, for this retracement down to our objective, which could be that 15-minute imbalance, right, which I think was here at that point, we're going to continue lower, and we expect this high to go, or this low, sorry. We trade lower. What do we find when we try and rally? Trading in to where? The SNDR, right? Failing here, cool. Second sweep, awesome. Trades lower, trades back up to where? The SNDR. Failure there, okay, we're going lower still. So we can have a valid long come out of this, and we did. It didn't sweep, it certainly wasn't A plus. When you're evaluating the strength of your position and you see a viable short entry while you're long, you need to be extremely cautious, right? If somebody else or the market is telling you that it needs to go down and there's viable short opportunity, then it's basically the equivalent of entering a short position is selling a long position, expecting lower prices. We trade down into this, we sweep here, right? Buy one tick, fair enough, inside of our area of interest. We got our 15-minute imbalance, this is the midpoint of it, cool. Typically reversals will happen out of there. We trade up into the imbalance, we respect it. This candle provides trading up and then trades lower. So our expectation with this imbalance top is that this low goes. It goes. Sweeps, closes strong. How viable is this for a long entry? Pretty viable. What do you think shorts should do? Buy to cover. Did they? You bet they did. What did this go to? 86 to, this is what, 17, like, wasn't this the trade that you caught, Tom, this morning? From here? All the way to the high. Banger. The man, the legend himself. Right? So you see, okay, we've got our entry, but now how do we hold, or what's our expectation? It doesn't do to go long and expect the high to be taken once you get into a long position. That's not consistently replicable. What is your analysis of the weather conditions that you're trading in. None of this is part of structure. None of it. There's no swing in here. Valid anyways. This is a lethargic pullback that's meant to be liquidated. So if when we flip bullish, and we did, you would think we called out in hindsight that it was expected to be a violent move. No. This is consistently proven that when you have this, this is pouring gasoline on a fire. And we accumulated shorts here before blasting through. So we continue on. We've got a swing here, cool. Pullback, what happens here? We trade into the open. You might not enter a long position here, but hypothetically, if you are short and you see this area being respected, why that area? It's your last structural bull bar. The low of that was 60.50. The low of this was 60.25. It swept below it. Failed. Putting in a valid high, or failing to put in a valid high. See you later. Continuing on, we put in another swing here. So we're looking at these areas as potential speed bumps should we retrace back down. And lo and behold, what does it offer us? Right? We started getting excited for the possibility of a pullback in here. Why? Because we see swings that are forming, or that one attempted to form, failed. This swing here formed, but it didn't trade back into our area of interest. Which leads me to believe that this high, once it trades lower, should take this low. Doesn't always happen, but you're starting to look at the market likes to make mitigations of prior zones to continue up in a healthy fashion. Failing to do that, it's almost like a little glitch in the matrix. Has to rectify it. So what do we get? Strong PA, cool. Trades below, body closure. Trades back in to where? The order block responsible. Fails here. Trades lower. Trades back in to where? The order block responsible. Trades lower. Finally, we get some capitulation. Uncharacteristic expansion. Right into our area of interest. Sweeps and fails. Challenging long for sure. But if you miss it, fine. You're watching the reaction. Strong reaction. It actually did go above this SMDR here. Sorry to sneeze. Right? Now, as I was discussing this with somebody in here, the only caveat to not looking for this as short, this is definitely not an A+ short. Why? Because we don't have any inducement that occurs beforehand. But there's still the possibility of sweeping it and then actually getting a movement back down to continue higher. And the expectation is to continue higher. So what ends up happening? We break the SNDR. What do we expect to happen next? We retrace back down into the zone. We don't have an SNDR in here, right? Typically you would see something in here that breaks above this high, and then we would trade back into it. The absence of such means we're trading back down to consolidation that broke the trend. This fractal. You could argue this origin, sometimes the origin will happen, but the market certainly made a decision here. I think it swept this candle and then went on a rocket ship. So the big trade that I took out of it, there's two of them. I took this order block trade here, right? We have a change in character and structure. Strong bear bar into our area of interest. Strong reaction, closure above, cool. And what do we get? We got this order block defended, the open of it. Very strong PA. Up we go, breaking structure. Now what we're looking for is, if we're going to take this high, this 15-minute high, we should create an SNDR for people to exchange their positions. Often you'll see sweeping below these structural candles, right? Sweeping above and then sweeping below. We didn't actually get a big sweep below. What we did get was a sweep of this bearish candle, and then lethargic response afterwards. This needed to trade back in and be gone. Anything short of that means we're going higher and very, very quickly. So that was a pretty lucrative trade. So if we continue on, we get rid of all this, and we're looking at, okay, we're now here. Where do you think the big area of interest is? Is it this candle that did nothing? Right? Or could it possibly be the consolidation that was responsible for breaking this high? So if we get a change in order flow that occurs here, trading back into it, we're looking for a potential long to come out of it. Ideally a sweep. If we get an institutional movement that comes in and we do this, then bang. Right? With the understanding that depending on how we trade into it, right? So you got a change in order flow that occurs here. You're looking to see what happens with this high. Why? Because this is the swing that's responsible for continuation. We actually traded up, failed in here, which does what? Makes this low weak. We sweep this low. And here we are. How likely is this going to be the top? Unlikely. Why? That's actually fair, but I don't like that it didn't sweep. That is fair. Right? We evaluate this high because there was no liquidity purge for anybody on the short side. Right? This to me is the last manipulation, predominant low. I would expect that we trade higher. Problem is we're 5 minutes away now. So it'll be interesting to see what this candle does.